Welcome everybody, my name is Michael, and today we're discussing about the flash crash that happened last night. A absolutely tragic event from $69,000 with the Euro Bitcoin pairing, now in the US dollar equivalent, now 63,000 and below. What has happened? An absolutely normal event, considering what has occurred. We've just beaten essentially all-time high. New records have been broken thanks to the ETFs, thanks to all this hype before the Bitcoin halving. And a lot of people who have been either in the negative or now positive or now profitable or now more willing to sell, to break even, to make up their losses, or maybe some people were holding since 10, 20, 30, 40, $50,000 and they made just a lot of money last night and they're happy. That's it. They're coming out. And if Bitcoin doesn't go any further, they've already made their fortunes, or they've doubled their investment, or they tripled, or whatever. They can now pay off their house. They can buy a car. Obviously, these are the rare situations when someone's made hundreds of thousands of dollars, because most likely you already had a lot of money in it before, or you bought when it was really, really low. If you bought, hey, $1,000 at 30,000, congratulations, you just doubled your money, but you made an extra $1,000. So after fees, right? Now, this flash crash occurred because of Coinbase. Thanks, Coinbase. So remember a couple days, not too long ago, when Coinbase had an issue, as soon as everything started going up, there was a $0 issue, $0 balance in many accounts. A lot of people got freaked out. Well, oops, stuff happened. So this always happens. Always there's going to be some exchange issues. I don't know, maybe they can't afford the server costs or whatnot, or the programmers. But essentially we had a little bit of a tumble, which is completely natural considering we went from 63 to 69 in a matter of a couple of hours. The volatility is there on the Bitcoin Fear and Greed Index. We're massively greedy. And it occurred after Bitcoin hit a record high of $69,325. It took 10 minutes for Bitcoin to return to parity with Euro trading. The flash crash was attributed to a couple factors. Now, usually it's due to a lack of liquidity or a fat finger trade. Essentially, it lost 23.7% of its value against the euro on Coinbase. This was during periods of extremely high volatility. I mean, you could see Bitcoin just dropping within a matter of seconds, $500, $1,000. It was huge. So this flash crash occurred where it went even further. And now we're not talking about, it went down $1,000 or 1,000 euros. In this case, it went from a high of 60,000 euros on Coinbase all the way down to $48,529. In order to move over 10,000 euros in its price, we're talking 23.7% of its value. You have to remember, we're talking about a coin with a $1.3 trillion market cap. We're talking about billions, tens of billions of dollars of volume that has to move this price. And this was a massive, massive wave that sent shockwaves to all other cryptocurrencies. The entire market froze and it was like, hold up, what's going on here? Now, outside of cryptocurrency, you've got the stock market, you've got commodities, you've got a lot of other asset securities that are going crazy. Everybody's making their money right now. Although today, the Dow Jones, S&P 500, everything's down. Although we did hit new highs, S&P 500, we've never been above 5,000. And here we are, well above $5,100 where we were. And we're just achieving new records. Obviously, people are going to be taking out their paychecks. They're done. That's it. You always have to remember there's probably a 72-year-old man out there who that was his goal, life goal. He hit it. That's out. He takes $5 million out of the market. And then, of course, you have the big boys, the whales, the hedge funds that are always manipulating the exchanges, the actual banks, the people behind the markets. They're manipulating everything. Now, this crash, this flash crash, is reported the most severe on Coinbase. On Kraken, it went from 60,000 euros to only 58,400. This variance is massive. And that's unfortunate in cryptocurrency, but we're going to see this a lot more. We've already seen this hundreds of times before, where each exchange has its own system. And obviously the exchange which has been the most impacted by this, well, they're the ones who are going to have the drastic differences from the others. In these cases, if someone has a bot or they're quick enough, usually these things last a couple seconds and that's it. There are extreme cases of arbitrage that can happen even between countries. You have an account in, let's say, Thailand and an account in Germany, and you might be swapping, kind of like Forex and foreign currency exchanges. You're able to swap these pairings and make 2, 5, 10, 15% in a matter of seconds, minutes. And when you're talking about millions of dollars, that's a lot of money right there. So flash crashes can occur either due to a lack of liquidity. It can be due to the amount of market sell orders. It essentially was too high for the amount of trading currently for the buy orders on the back end. If there's too many sell orders, the price shrinks to the point where we're able to fulfill those buy orders. And if there's too big of a difference, it falls to wherever that point is. In this case, somehow we went from 60 to 48, Kraken from 60 to 58, 400. That's a huge difference, but it happens. Other times it could be a bug or a mistake from the cryptocurrency exchange side. It could be one cryptocurrency exchange has a bug issue, or maybe they were hacked or something happened and it impacts everybody else, or it could be even a rumor. And that's it. That's all it takes. It's a wildfire. That one little spark spreads everywhere, and suddenly people are selling like crazy because they don't want to miss out. Hey, I'm in the profit, but tomorrow I could be negative. Let me just hit that sell order. Oh no! You ever had this in cryptocurrency exchanges? I had this with Ripple before when it was super volatile. It gets too volatile that you put in your order and it can't get fulfilled because by the time the exchange takes 2 seconds because it's so delayed from so many orders from such hype that the price drops and I need to cancel that order and let me redo the order. Oh no, it happened again. There was one time, I still remember this day, where Ripple, I was trying to sell it and I had to do 4 in a row because it was just panic selling. I was still in profit. I'm greatly happy with that decision because I ended up 25% profitable that day. But it was a lot more had I been able to sell earlier. And that's why people who are more experienced or people who are lucky and quick on the draw are able to, or, you know what you're doing and you're using a bot or programs, you're able to make a lot more money with that. A single mistake by a whale, it could be called a fat finger trade, or by an algorithm. Nothing's perfect. AI, it's popular in the news nowadays. Sound like an old gentleman here. But, still designed by humans. Humans make mistakes. Stuff happens. All it takes is one mistake and suddenly everybody freaks out. So within minutes, everything was reversed in terms of gains. But now we are in new grounds, new territories. We're chilling at 63,000. There's resistance, but that's fine. People are still very excited. We want to reach past 70,000. That's a huge wall right there. But there's a lot of things still happening before Bitcoin happening. Now, outside of cryptocurrency, we're taking a look at gold. Gold is also experiencing a storm right now, a perfect storm. This is with expectations that the Fed will cut rates in the summertime, and gold has reached a high of $2,150 This was after April contract settled at a record $2,126.30 per ounce per session. So this was a record. The previous record was essentially the new record was $2,141.79 per ounce. The previous record was below $2,100. So we're looking at even stuff outside of cryptocurrency. Hey, most of us are not investing in gold to make millions of dollars, but it's a safe asset. It's kind of like the old elderly people who come into the bank. They park their money in CDs. Of course, they have other investment assets, but they park their money in CDs because let's say, hey, I'm trying to buy a car in 7 months. I know I need $25,000 for a car in 7 months, but there's inflation I have to keep in the back of my mind. And now CD rates can even be up to 5%. So you're beating inflation, essentially, at least what the government is saying. So I park that money in there and boom. Well, in terms of gold, it's a pretty safe asset as well. You're parking your money. You're probably not going to make a whole lot investing in it. There's better places to invest your money, but it's to diversify. So just in case stocks and crypto and everything collapses around it, at least you put your money into bullion. There's a lot of political uncertainty right now, and in times like these, that's when gold and the traditional assets start to go up. So you're most likely expecting, it's not certain, but most likely a cutting rates by the Federal Reserve around June. And Europe is expected to do the same this year. So Philip Streibel, a chief marketing strategist at Blue Line Futures, said he has noted that prices have risen by about $150 since mid-February. We've got a perfect storm brewing in the gold market and the possibility of bank turmoil. We've had multiple banks that have failed last year, Silicon Valley Bank and all these other big banks. Anything that happens after New York Community Bank Corp, they were in the news today. This past week, really, they've had a lot of financial woes occur. This turmoil has renewed 2008 thoughts. Every time a bank goes down, there's these ideas that, hey, the government will come in and swoop in and save the day, and they're going to make sure the bank doesn't go under. Well, it depends. As we've seen, not every bank gets the same treatment. There are some banks that are too big to fail, but there are expectations that the federal officials will come in and potentially save New York Community Bank Corp, which is one of the largest banks in the entire world, and America, of course. But it just looking at the assets under management, we're talking about most of these banks that are failing. Yeah, you're talking about billions of dollars, but when you start getting into the $1 trillion and up territory, it's a different ballpark. So Philip here has stated, if you do have some kind of bank failure, some kind of regional bank risk, you're going to see a pull forward, and those rate cut expectations by the Fed, they'll end up making those cuts a little bit sooner. So it might happen even before then. So one potential thing that could delay everything, if Friday's report on jobs comes in better than expected, the Federal Reserve will have no reason to push it earlier. They're going to try and delay a cutting of rates because, hey, everybody's doing great. The job market's fantastic, which this is interesting because when we really start talking about the job market right now, everyone's saying, government officials, we have more jobs right now, we have less unemployment. But really, what kind of jobs? Is it middle-class jobs? Is it the jobs that people actually want? No. You're having a lot more of these postings that are fake by companies. They don't want to hire externally. They're hiring internally. They're only doing this to make sure they abide by HR laws and whatnot. And you're having a lot more of these jobs that are available that have quick turnover, a lot of turnover. You're having the undesirable jobs. You're having entry-level jobs. You're having temporary contracts. You're having a lot of stuff that is targeted towards people, the middle class. Well, maybe they might take it if they're really in a cinch. They don't have any money. They might take it for a couple months, but you've got hundreds of thousands of jobs that people don't necessarily want. They're looking for something better. But if they have a degree, they might have to toss that degree on the table, take it off their resume, and take up a part-time job right now just to make up for the fact that it's a terrible job market. People who have been applying to jobs, it's just one of the craziest things ever. One of my programming buddies, he finished his degree. He's very smart. He gained a lot of experience in different programming languages, but he realized that it took him forever to get a job, and it took him so many interviews, so many applications, so many technical interviews. And now it's not just, oh, okay, you have a great interview, everything's fine. Even for entry-level roles, like for my bank job, every single bank I interviewed with, it's always 3 rounds. Some are even 4 rounds. Some, it'll be 5 rounds. You're talking with the vice president of this district, and then you're talking with the market manager, and then you're talking with the branch manager, and then you got another vice president of the entire region. And it's like, okay, well, I can only imagine how this job interview would be if you're applying for a C-suite position. You know, how many rounds is it going to be? 7 rounds? And there are jobs that have panel interviews, and then you have 7 rounds and technical interviews, and holy moly, it is impossible to get a job, a good job right now. Because even for the normal jobs, I was a salesman. I was a car salesman. Why did I go into banking? Well, I'm excited about my future with being a financial advisor later on, or private wealth. I did want to try it out. But even for like entry-level banking positions, I went through so many interviews, so many applications. I'm talking about hundreds and hundreds of applications that first off started. This was a multiple month-long process. In when I was still in car sales, I was applying for sales positions. And I had a bunch of interviews for sales companies, remote positions, hybrid positions. Obviously, those are tougher. The normal in-person positions, I've had hundreds of companies that didn't respond. I probably sent over 1,000 applications. And this is just absolutely insane. You got so many people crying on Reddit, so many people crying on social media right now. you would see a job posting and then suddenly 500 applicants for it, over 1,000 applicants within 48-hour period on LinkedIn, on Indeed. You'd have to steer away from those platforms and go to better platforms. Honestly, the only thing you could do is go look at local companies around you, go to their actual website, apply, and reach out to the hiring managers. And even then, it was like tossing a dart into the dark, and you have no idea. It takes forever to get a job. I can only imagine for the higher paying jobs how long it takes. It's a terrible market right now. So if this job market report comes in hotter than expected, the Federal Reserve will probably push everything a little bit. They'll delay it. But honestly, in my opinion, just because the government says, hey, everything is great right now, unemployment's low, you're seeing people who have worked 20, 30, 40, 50 years, and they're saying this is the worst job market they've ever seen in their entire career. And I've seen it myself, where my programming buddy said, okay, this is very tough for the tech sector. The tech sector got hit hard last year, where it's tough. You have to stay at your job, you have to gain experience, you have to take 10 different courses and licenses and learn all these different languages, because now they're outsourcing to cheaper countries, and there's so many people, so many applicants that you have to fight against that it's just insane. But okay, for the entry-level positions, it's a little bit better, right? Well, now there's so many entry-level positions out there, and there's so many applicants, and there's so many desperate situations that now you're also fighting for that entry-level job, and you're having multiple rounds for entry-level jobs. It's crazy. So that's my little spiel. So bullion's price increases have been disconnected from recent outflows seen in gold-related ETFs. A lot of experts actually believe that these ETFs, a lot of money has been shifted from gold to Bitcoin, where now you're having billions of dollars in inflows. They're new on the market. They just came out in January. And Schreibel said, we're seeing that rotation out of gold and into Bitcoin. It's attracting about $1 billion per week into the ETF inflows, and it's growing. Central banks have been buying gold at historic levels right now, and adjusted for inflation, gold hit a record back in 1980 when it hit $850 per ounce, which would be around $3,200 in today's dollars. So you're having a lot of stuff happening with Bitcoin, with gold, with all these markets. Let's see what happens further. But anyways, that was for today. Thanks for watching. Have a good one, and take care.